As you know from previous discussions, one of the things that we are looking at is heightened volatility in the markets, and the best way is to sort of de-risk portfolio. Obviously, so maintaining exposure to those places which look more attractive, perhaps right now, as we think shift to valuation, maybe a little bit more attractive from a valuation perspective. But yes, I think safe havens, diversification, so on help. But when you have significant overvaluation around a lot of different asset classes, it really makes sense to consider de-risking as well.
Andrew, I mean, you talk about the risks of not getting a stimulus through. Do you have any idea of how much downside to the market there will be if we don't get a deal before the election? Because it does seem as though the market is really banking on this one.
It certainly is. And the market's of course, has been driven by sentiment, and that's been tied to momentum. Momentum has faltered. So where is the market going to be looking towards? If it looks towards valuations, then there actually is a fair amount of downside possible. And in any case, quite a lot of volatility. So you have to distinguish between the market and the economy. The economy itself is also looking a little weaker than it was before. So it's not a great picture unless we somehow get, the stimulus to keep the economy going and perhaps, improve the valuation outlook by improving growth prospects.
What about investing via ETFs right now? Index-based investing, passive investing. What are your thoughts here, Andrew?
Well, index-based investing obviously is going to be tied to those asset classes that have done, for example, if growth's been outperforming for a while, it's going to be a bigger share of the indices. So you automatically have a bias towards sectors that have been performing well. And if, in fact, we have a shift to valuations, you do have to be concerned about the relative valuations of growth to other asset classes. So there's some argument, for example, for industrials or financials right now on a relative basis. And the increase in longer-term bond yields is a positive for financials as well.